Hi, everybody. It's my pleasure to introduce to you Lloyd Blankfein, who has been with us now many times at this conference, and we're thrilled to have you back. And I should also say thrilled to see you in good health, because you were going to be with us, if you remember, last year.
Right.
And you were recovering. So
I ducked it, but it wasn't worth it.
But we are appreciative of you being here. So much to talk about, including, of course, the election. So let me just start with this. As you can imagine, did you ever imagine there would be what some people are now describing as a Trump rally?
A Trump rally?
That's what it's being.
Oh, no, in the market. Well, I had to have, of course, I imagined that he could win. I thought a rally is in people with I thought the election was over. Of course, I imagined that he can win. I did not think it was a high probability, but if you had told me that he was going to win, I would have told you there would have been a rally in the equity markets.
You would have?
Oh, of course.
So all of the prognostications, including, by the way, I think some of the analysts at Goldman Sachs who suggested that the world was going to come to an end and that the markets were going to fall 5
by the
and
way,
10%.
there was a chance that the world would come to an end, and in which case we wouldn't have had the rally. But not because of him, I would have thought that it would have been such a jarring prospect,
right,
that it would have been a discombobulation of the market at first, followed by people going out and looking what his policies he's committed to and recognizing they're very asset and market friendly. So if you look at the totality of the positions he staked out, so spending on infrastructure, military, more fiscal spending, even in excess of what Secretary Clinton was going to do, and lower taxes, potentially lighter regulation. That's a combination. Now, kind of a burden on free trade that goes the other way, but if you netted it all out, it was very supportive of asset prices, very supportive of equities, providing you got through that jarring moment when you found out that he got the election and created that uncertainty. Now, that jarring moment happened. I didn't think it would only last 8 hours until the market opened the next morning, but the night before, the night that it happened and was occurring, the Dow was down, futures were down the equivalent of 800, 900 points, and of course, the market closed up the next day. So that happened a little quicker than I thought, but there's really no surprise. His policies are market supportive. Now, I'm not saying it's good or bad for, you'd have to draw a different set of conclusions depending on your attitude about everything else, but just as far as asset prices in the market is concerned in the near term, how can they not be supportive?
Well, that was my question. To the extent that you want to prognosticate a little further out than these past 48 hours, given that things have actually moved.
It depends on what kind of a president he is. All I know is, I know a lot about, at this point, we all know a lot about Trump, the campaigner. Now we have to find out about Trump, who needs to get things done and starts to think not about getting elected, but what his legacy is going to be. And, I assume you go into that office and you think about your place in history and things change.
I don't know if you saw the report this afternoon.
I'm willing to. I'm going to see how it goes before I join before I become mournful.
Before you become mournful. I don't know if you saw the report this afternoon that apparently on the short list of people for Treasury Secretary is a peer of yours, Jamie Dimon.
Wow, terrific.
Do you think that's realistic?
Well, I think he would, look, there's certain attractive aspects to that. Think of a couple of attractive, he'd be a great Treasury Secretary, and he's been a terrific competitor, and I'd say in that one move, he can kill 2 birds with 1 stone.
Let me turn it around.
So the possibilities are terrific.
If you got the call,
asking me whether Jamie should be Treasury Secretary?
If you got the call to be Treasury Secretary, there have been others from Goldman Sachs who've gone into government before.
Dozens.
And would you take the job?
No, I don't know. I wouldn't. I think people, again, look what I said a few minutes ago about your place in history, and I said that's a tough. You'd have to weigh that. Whatever else people have pronounced and said or thought, when you have an opportunity to make that kind of an impact, you'd have to think quite seriously about it. And, everything, you'd have to know what your role would be, and and your relationship with your boss, and those things are important, and what kind of license and latitude and what priorities your boss has, which then you'd have to deploy. But gosh, people who say, look, I'm familiar with a number of people who've accepted that job. I know what they said before, and I know what they said during the process, and I know what they said when they were sworn in. So I think that, knowing that as I do, I think a lot of people, would take that job, and of course people would consider it.
Let me ask you about your views and personal relationship, to the extent you have any, with Donald Trump. You ended up in an ad, a negative ad, dare I say, that Donald Trump ran at the very end of the campaign. Did you know that was going to come?
No, I didn't know. I didn't.
And you thought what when you saw it?
Well, after I got up off the floor, I was thinking that I didn't take it. I didn't take it that personally. I didn't realize, boy, there was Janet. I said, I'm in pretty good company.
Janet Yellen was also in the ad.
Yeah, and the voiceover, and was about the power structure. And I said, gosh, I didn't know it was that powerful. So I just think, the campaign, I didn't take it. Look, I've been in the press a lot from time to time. That does not make my top 30 list of things that I would be concerned about.
Let me ask you about two other former Goldmanites that may actually get this job if Jamie or you don't take it.
Now it said I'm not taking the job? Okay.
Steve Minuchin,
Yep.
a former Goldman Sachs
Yep.
alum. Steve Bannon, by the way, I don't know if he's going to what job he'll take in the administration, but he's also a Goldman Sachs alum. What can you tell us about them?
Well, I never met Steve Bannon, as far as so I don't know him. Steve Minuchin, I did. He, when I was running the fixed income division, he reported. He was a high flyer. He was a very smart guy. He was a partner at a young age. Did very well, So he was a very senior guy at a very young age at Goldman Sachs. So he's a smart guy. I mean, I followed his career. I know what he's done, but I haven't really engaged with him that much since then. But I'll tell you, I'm sure he stayed just as smart as he was when he worked at Goldman.
Good answer for when you go visit him at Treasury. Let me ask.
Now I'm visiting him. He's not visiting me. Well, I just got demoted.
We'll see how this goes. Let me ask you about this headline. This is in Vox in the last 24 hours. It says Donald Trump's administration is going to be a bonanza for bankers. That this is ultimately going to be very, very good for the financial sector. That ultimately he may reverse what was Dodd-Frank. That many of the regulations may come off, and that much of what has happened over the last 4 and 5 years in terms of the regulatory environment is going to look very different 24 months from now. Do you believe that?
Look, regulation is not going to be repealed. There could be some modifications that could make sense. I wouldn't want regulation to be repealed in toto. There's certain kind of duplicate, look, a lot of the regulatory framework is have more capital. We could have regulated the amount of capital, could have regulated the type of activities, could have regulated remedies if something, did everything. So if there was something that could have contributed to stability, let's not choose, let's do them all. So there's certain things that have a kind of backbending effect and has, repress activity. It could be appropriate to go look at some of it. You wouldn't want to repeal it in toto, but I will tell you, if you want to be good for bankers, you have policies that drive economic growth. That'll be good for bankers, it'll be good for companies, it'll be good for citizens.
And let me ask you this, just in terms of trying to understand what may or may not happen around Dodd-Frank. One of the things that he did say on the campaign trail, and I don't know if you think he will ultimately go through with, is Glass-Steagall, bringing it back.
Right.
Do you think that's real?
I don't think it's realistic because that, that omelet's been made and that toothpaste is out of the tube. Pick your metaphor. But banks are around the world are highly, Glass-Steagall separated investment banking from commercial banking lending. At this stage, you can lend to a bank or you can underwrite a corporate bond from a bank. They're economically equivalent things, and universal banks do everything. And that's the way the market's evolved over the last 25 or more years. The fact of the matter is, we stayed pretty close to a much more pure investment bank than the ones than you would consider our competitors, and we'd be the closest to in fact, very close to a historically Glass-Steagall compliant model. So that would do very, very little violence to our business strategy and our plans. Notwithstanding that, I would say that the world has evolved since then, and you really couldn't separate those activities because lending, corporate bond trading, they're kind of substitutes for each other. They're kind of equivalents.
Right. Where do you think the popular image of bankers is at this point? And
in my household or well, I would say, look, I don't have to rely, I don't have to speculate. Part of what we do is we try not to be tone deaf, and we try to hear things, and we listen closely, and we go out and we ask people. And I'd say, it's not in as low ebb as it was in the heart of the financial crisis. It's still, it's still low ebb, and to that extent, we compete with a lot of other institutions, Congress, institutions, and I think in some ways this election and other elections around the world is a reflection of the low esteem in which a lot of institutions and businesses, and within the context of businesses, industries, pharma, extraction industries, that all of these things do great things and are essential for society, but they're in a they're kind of in a low state. I would say, bankers is very competitive for the lowest, but we have a lot of company these days, and we have to work on that. We know that.
What was your reaction? And I don't know if you've talked about this. Your reaction to Wells Fargo and what happened there?
Again, we're in a different, we're a wholesale.
You're a different business, but you're, by the way, about to get into. I want to talk about. You're about to get into the retail business.
I would say my reaction to Wells Fargo would have been, you might as well. Wells Fargo sounds like an institution we are as different from each other as any banks could be that are still among the biggest banks in the country. But I have, I don't always know, but of course, when you're in that kind of spotlight and you have to make rapid decisions and you get caught up in the whole vortex and you don't have a lot to respond, it sort of brought back, I had, stress syndrome. It reminds, we've all got a lot of people go through the washer. If you haven't gone through it yet, you don't realize it. But if you've been doing this stuff as long as I do, you find yourself with challenges that you have to work your way through.
Right.
I know the people that, I know the senior most people there, and, they're quite good people, but people get, you find yourself in challenging situations. They're very big companies and things happen.
Right. You talked about you have now been at Goldman and in this position for the longest. You're the longest running tenure in this role.
Well, no, I have the longest tenure in a long time.
In a long time.
But John Weinberg was there longer, and Sidney Weinberg ran Goldman Sachs for 39 years, and I'm not going to be competitive.
What I wanted to ask you, you named some new partners yesterday.
Yeah, we did.
And one of the things that's so interesting, and I think this is happening across Wall Street, but I think it's particularly true at Goldman Sachs.
That was the other election that took place this week.
The other election. People are staying longer at these firms. It used to be, there's a culture question.
Feels longer.
People are staying longer, and it used to be you'd work at a place like Goldman, and maybe when you were 50 or something, 55, you'd go off and go into government or go do something else. And so there was an enormous amount of turnover.
It still is. It's still.
And so the question is whether you think that's changed and whether you think internally.
No, I don't. I don't have the numbers, but it's pretty close. I'd say the average tenure as a tenure for Goldman Sachs partner is not longer than it was. It's probably around between 6 and 8 years. People can make partners at any time, but a lot of people make a partner in their, in their late 30s or early 40s. Some later, some are, some a bit earlier, and so. Most of the time when people leave Goldman Sachs, look at all the names of the people you're mentioning, there's certainly time for another act. And in fact, I remember when I became a partner at Goldman Sachs, well, there are always exceptions to this, have another act, because I've been a partner now for almost 30 years, almost 30 years. But I remember when I became a partner, I was taken aside by the managing partner, the administrative partner. He said, Lloyd, they're just, they're blah, blah, blah. This is how you have to live your life and pay your taxes and do everything on the up and up. And here's 2 other things. Set up you should be philanthropic, set up a foundation and join boards, charitable philanthropic boards. And the other thing you should do is you should arrange your life so that if and when they finally write an obituary about you, and it's 9 paragraphs long, no more than 2 or 3 should be about Goldman. You should have to have some balance in your life.
Let me ask you about then.
So we didn't all take that advice, as you can see, because here I am.
I see that.
Yes.
When you think about being a banker today, young person being a banker, it could be argued that the quote best and brightest were going into banking for a very long time. But a lot of money. You can make a lot of money in the banking business, and you can still make a lot of money in the banking business, but you can't make as much money as you used to be able to make. And you see people going into technology and to other places. Has it made it harder to attract talent? What's happened in the last 8 years?
You know, my guess is we're not seeing as many of the best in the industry for too long had everybody. I mean, I think there was 1 year that I read some statistic that something like 60% of the graduating class of Yale was coming down to Wall Street. That didn't make a lot of sense. We're getting fantastic people. The ratio, I think we have something like, we hire thousands of people every year. I think we take fewer than 2% of the applicants. And by any statistical measure, it's a better class, and it's better, higher grades, whatever. And Goldman in particular, if we give an offer to someone and they get offers to someone else, we have over an 80% yield. That's not, Harvard doesn't have the same yield when people get into more than one college. So, you know, we do pretty well, but you don't hear the phone that doesn't ring. And so are there more people that are going straight to Silicon Valley? Yes, and probably good. Because first of all, if they're not committed to Wall Street, what happened is for a long time, and still to this day, there are people who come to us because they wanted to, you know, they're committed to finance, even though they may change their mind later. And there's a lot of people who come in because they want the validation or the imprimatur of 2 years at a clerkship at Goldman Sachs, because you learn a lot of transferable skills that help you in other things, and it's a good network, and, you know, et cetera. And, you know, if we had fewer people apply to us and take a 2-year job who had no intention of staying in the industry, that's not so bad for us.
What do you make of the hedge fund business? I mentioned to virtually everybody on the set this morning that we were going to, or this afternoon, that we were going to be seeing Bill Ackman shortly. It has been very tough, not only for Bill Ackman, but more broadly for the business. And you have many hedge fund clients.
We do. I think that's look, there's always going to be tremendous opportunity set for people who are good investors and beat the market. There's sometimes when it's harder and sometimes when there's a cycle to everything. And I think this particular moment has been a tough cycle for people to have breakout returns. And so the returns are down. I don't think that's in 30 years, I'll look back and tell you whether it was permanent.
Is that a function, though, of interest rates?
Partly. There's a lot, you know, if there are times in the market where it's very good or very bad, in both of those cases, everybody acts the same. And, you know, we happen to be in one of those moments where interest rates are zero. It's very hard to distinguish, even in our own industry. Now, look, I could be going back and looking back and saying, my God, this was the golden age, these last 8 years or so in banking, but I don't think so. There's a lot, you know, banks are spread businesses. You know, basically, even we do, even the way you price derivatives, you know, people lend, you know, basically there's a lending and a spread embedded in all these things. When the spread is zero, there's not much you can do, and everybody.
If you don't get the gig as Treasury Secretary, do you want to be, would you take Federal Reserve Chair?
You know, unless you know otherwise, and you'd probably hear before me, I still have a job.
Who would you like to see be the chair of the Fed, given that Donald Trump has made some comments that Janet Yellen will not be in that role in the future?
You'd have to give me a list, and I'll tell you. I'll rank them for you.
How about John Taylor, which is one of the names at the top of the list?
I don't have a view of that, but I tell you, whoever gets that job, I'll get along with.
One final question for me, and then we'll open it up real quick to the audience. You have decided to get into the retail business under the brand Marcus. How did that happen? What is that about?
Don't you think Marcus is a great name?
Where did that come from?
Our founder was Marcus Goldman. That's an answer to the question, by the way.
Thank you.
So we took his first name. It sounds kind of.
But why go into retail?
All right.
Where's this going?
Okay. So we are in a retail unsecured lending business, but the real driver of that is not so much that we're going headlong into a consumer retail business. The real driver of that is that with the way the capital rules are, we could grow. It's much better for us to grow into some, you know, we're dissuaded from growing into certain activities that are capital intensive and it's easier to grow into other areas that are less capital, that are more favored by the regulators and capital rules. Lending is a place which historically we haven't done as much of, being an investment bank. And so what we are doing is we are building lending platforms and lending businesses. So one of the places where we can go to, where we thought we'd have a relative advantage and actually fill a need and fill a void, is consumer lending. Not because it's a consumer business, but because it's a very good lending business for us to go to. And the reason why it's good is because the way consumer lending is made, a lot of it is digitally approached. Judgments are made algorithm. You slap a credit card down and somebody's making a loan to you. That's not somebody examining your character like Bailey Savings and Loan. It's done on the basis of FICO scores and algorithm and risk management, which we think we're pretty good at. Delivered digitally, which we think we're pretty good at. It plays into our technology strength. There's obviously a consumer experience, and we have to import that talent, and it's important to get that right. But the principal reason is we think we can risk manage it, we think we can deliver it, and it's a good, relatively safe, relatively lower capital cost kind of a lending business. And we're doing other lending businesses. And it's a valuable niche for us to fill. Because when you think of how much credit card debt there is out there and how expensive it is, allowing people effectively to refinance that by taking out an unsecured loan from us with no fees, very simple product, at a much lower rate, really accomplishes a lot for the consumers.
Let's open up for questions. How big does that business ultimately become? I mean, we had this conversation 10 years from now.
Well, I hope I hope our outstandings are in the billions.
Fair enough. I think we have
a
couple of mics. A question over here.
By way of introduction, my name is Nizam Alavi. I'm a student at the University of Michigan and will be starting a career in investment banking. And in banking, we learn a great financial skill set. And I was curious to know, how can we use that skill set to do social good in the world? And are there opportunities for us as a new associate?
Listen, you'll be afforded a lot of opportunity to apply your skills. This morning, I was at an event, speaking at an event for our 10,000 Small Business Program, which really is a matter of training and developing, applying the skills that we do on a wholesale level to a retail level, and really driving a lot of growth and job creation, and that's very important. But I would say the biggest contribution you'd make in a life well-led in finance is that you will pick great companies to finance, some of which might not get financing and might not exist but for your help. And if you do a good job, you'll get a reputation for that. You'll attract other people to finance and go where you suggest they go, to industries and companies. Those companies, because of your contribution, will expand, hire people. Those people will earn a living and go out, and they'll go out and buy products of other companies, and that's the virtuous circle. And so what I want to say is we will all have balanced lives and do a lot of philanthropy. We'll apply our skills to different parts of the market that we don't otherwise get compensated for because they're underserved. But probably the most important thing that you'll do in your career is you'll do your banking job well, and you'll finance great companies that will go out and provide the livings for many, many families who'll go out and stimulate growth in other sectors. That's the most important thing that you'll do. That'll be a big contribution.
Let's see if we can stick one final question in. I see a hand back there. Go ahead.
Thank you for taking my question. I'd like to get your thoughts on the idea of Robo Advisors and the whole debate of passive versus active, and whether a lot of your current employees and current clients as hedge funds eventually will be replaced by machines.
It's very interesting. I think generally machines are tools and they provide a lot of leverage. And interestingly, like so much of other walks of life, I think what machinery and algorithms do is it creates leverage, which means you'll have fewer people engage in any activity, farming, extraction because of machinery. But the people that are involved in it at the fulcrum of that activity will become much more important than ever. And so that's part of what's driving some of the tectonic shifts that we're seeing in employment and wealth inequality, the fact that technology allows so much leverage for things to get done with fewer people, makes those fewer people in the business much more valuable to get the best of the best in that activity, and leaves other people scrambling a bit to replace them, replace their jobs by getting other skills which may or may not be available, and that's part of the issue that there is in the world. But believe me, there'll always be room for terrific performers. And by the way, those machines have to be programmed. So when you program the algorithm to think like a person, that's done by a person.
Lloyd Blankfein, everybody. Thank you very, very much.
Thank you.
Thank you. See you in Washington. See you at the Treasury Building. Thank you so much.